If wife buys husband out of the house, awarded to solely her pursuant to a divorce agreement, but husband remains on the loan for a limited time or indefinitely, how much will it impact him if he tries to get a mortgage to buy a place on his own? So I think what he's trying to ask is if the husband and wife stay on the loan together for a certain period of time or indefinitely, will husband be able to buy a property on his own? And what criteria are the banks or the lenders going to require of him in order to do so? Obviously, based on his FICO and based on his income and all that kind of stuff.
Yep. So if I could even dummy it down one step further, I have a scenario where husband and wife get divorced. Let's call them Sally and John, right?
Yep.
So John's divorcing Sally. Sally is going to keep the house through the divorce, but Sally doesn't have any income. Sally can't get a loan. She has a credit problem, an income problem. There's a something blocking Sally from just going and taking the loan. So
Okay.
John offers within the settlement to say, I will stay on the mortgage because you're getting the house within the divorce settlement. But if I need to go buy something because I got to go live somewhere, or in the future I want to buy something, or I want to get something for someone else and I want to co-sign, how do I, by helping you out, Sally, as my ex-wife, how do I not hurt myself for getting financing in the future? Right?
Right. Makes sense.
Makes sense.
Okay.
So in that scenario, one of the two things very important to remember here. Banks are always, and we're going to address this in every type of scenario that we go through. The banks care about one thing. The methodology, we're going to keep going back to always, is ability to repay the loan. So whether that's Sally in this case, whether it's John, whether it's John and Sally, whatever it is, banks are going old school. If I give you $1, how you paying me back my dollar, right?
Right.
I'm a good guy. I'm a good girl.
Doesn't work.
Help.
Yeah.
You know what I mean?
Yeah.
I was once rich. Doesn't help.
Yeah.
I was on a TV show in the 60s.
Doesn't
Great.
matter.
What are your royalties?
Yeah.
Like, just tell me how where you're gonna get money from to pay me back every single month. So in this scenario, it's actually an interesting one that comes up a lot. So what John is doing is helping out his ex, Sally, who is therefore getting divorced, and says, I will financially still stay responsible so that you could stay in this house and I'll stay on the mortgage.
Right.
So therefore, we're still using now, the mortgage is already in place. And it could be, think about the timing, it's 2022. Think about it that maybe they just did a refinance and they're at 2.5%. And now they want to buy each other out. It's 2022 and rates are over 6%.
Right.
And Sally's like, look, this thing doesn't make sense for me. So John says, I will keep the 2.5% interest rate that we have together here, and we'll work that out to the divorce settlement. So now we have an issue because what happens if John wants to go buy something else, right? What is his responsibility? So there's two different ways to look at this. Responsibility number one is we're going to always ask the question, who's going to pay this mortgage? Now, if the answer, John answers and says, well, part of the divorce decree and the settlement is, I'm going to always pay this mortgage. Well, then, John, respectfully, you're always staying on this mortgage and this is always your debt. And it's always your obligation. Right. But here's an interesting scenario that will come up. Sally is going to get $25,000 a month from John for living expenses, housing, whatever. So Sally will be able to make this mortgage payment going forward. So after 12 months is the general idea of Sally now making these payments. And then a year later, John goes to go get a mortgage. He comes to the bank and says, hey, I want to take a loan. They start looking at his liabilities, his debt. They go, wait, you have a mortgage here. And he says, yes, I do, but it's my ex-wife's. And my ex-wife, Sally, has been paying it. Here's 12 months where you could see Sally out of her own bank account has been making this payment.
Right.
Because Sally makes the payment, I'm not obligated to it. Right.
Okay.
Simple scenario. So in other words, the bank just wants to see who is responsible for making this payment and who has been making this payment for at least a consistent previous time.
How do you prove that? What are the requirements for to prove that she solely made those payments?
Yeah, so that's actually such an important point because so many times we'll get this scenario. We'll walk them through it, and then guess what I get? So you asked that question. My answer is, well, I need to see 12 months of canceled checks, or show me a bank ledger out of her bank account showing her accounts. Right. Then we get the statement, and guess what's on the statement? It's a joint account, John and Sally.
Right. So that doesn't work.
And you're like, wait, we just shot ourselves in the foot. Right. So to your point, it's got to be set up properly up front. It's got to be Sally has her own bank account that Sally is therefore going to be making the payments out of. And
Okay.
by showing that Sally has money coming in and Sally makes these payments, we can now remove that debt from John.
Okay. That makes sense. What about, and let's take it one step further, what about the liabilities that John has when he stays on the loan for that 12-month or more? Is he still like fully responsible as time moves on? Is he still fully responsible for that loan, even though she's making the payments and he went out and bought another property? Is he still 100% still fully responsible for that loan?
Yeah, and I love where your question's going because now we're going to focus separately. We were just talking about Sally's point of view, right? And how
Mhm.
she's going to have her ability to repay
Yep.
and what detriment could happen to John. But I think you're making an even more important point. We need to go back to the beginning. There was an original loan that was taken out by John.
Right.
John promised the bank that he is going to make these payments on the loan. Regardless if someone else makes the payments for 30 years straight,
Right.
that original loan was given to John. So unless John refinances, sells, or pays off that loan that John took, John is forever responsible. He has what's called a promissory note that
Mhm.
he signed at the time of closing that says, I promise to repay this loan regardless if he's living there, regardless if he's still married, regardless if he still has his job. He took a promissory note. So great question, because that responsibility stays on John up until the day that that loan is ever paid off.
Right.
And you see this a lot,
Mhm.
not to shift too far, but you'll see this a lot in a deceased situation, right?
Right.
Let's say
Right.
in our case, John passes away and leaves $1 million life insurance to Sally.
Right.
Sally continues to make payments. The bank technically never knows the wiser. The bank never knows, but technically, John is still on that loan and therefore still responsible for it. So
Right.
never confuse somebody who's making payments and doing the obligation on it doesn't ever remove the original John who took the loan from being responsible.
So his liability still stays
Yeah,
100%.
yeah, 100%. Yeah.
All right. All right.